I want to give a huge shout out to somebody I follow on Twitter or X. He also has an amazing YouTube channel. His name is Tom Nash. Tom Nash is a wonderful content creator, very passionate investor in Palantir and Tesla. And the reason I want to give Tom his flowers is he has been calling for Palantir to be a generational investment way back when Palantir was a $5 or $6 stock. And once again, Palantir crushed earnings, crushed revenue, raised guidance, and last time I checked was now $100 stock. So anybody who is that committed, keeps dollar cost averaging, and is now up 20x in his play, I think deserves a shout out and recognition. So Tom, congratulations. Appreciate the content. Love the humor. Love the fact that you just put it out there, and just well done. I hope a lot of people followed your lead in going in that direction. So again, Tom Nash, give him a follow, give him a look. He crushed his Palantir commitment. Since we're talking about earnings, we did get a bunch this morning. We get more after hours. Ferrari, yes, the high-end sports car, beat top line, beat bottom line, and raised guidance. PayPal also beat top line and bottom line. Just to remind you, what is top line? What is bottom line? So when I say top line, I want you to think revenue. So top line in Ferrari's case is how many cars did they sell times an average sale price, bingo, bango, revenue. When I say bottom line, that is revenue minus all expenses. And then there will be hopefully a positive number at the end of that. So again, they beat earnings. Same with PayPal, beat top line, bottom line. PepsiCo missed on revenue. So they did not sell enough soda water, did not sell enough snacks, but they did beat on earnings. Interestingly enough, PepsiCo is one of those dividend kings. They raised their dividend 5%, marking a yearly dividend of $5.69. Talk about a healthy distribution. One thing that was interesting in PepsiCo's earnings statement was demand for drinks and snacks in North America, aka the US, are down. Now, is this a sign that consumers have given up on snacks and soda water? Is this a sign maybe that we are all looking at getting healthy? Shoot, is this a sign that Ozempic is working? Right, think about it. If you take Ozempic, as near as I can tell, it depresses appetite, and maybe there's enough people on Ozempic that's not buying Frito-Lay or chips or whatever it is, and we're seeing a drop. And again, anytime you see something like this, it's like, what else can we take from this? So again, that was earnings. I do want to take a quick victory lap. Yesterday, you may have seen a debate between Taylor from Life Goal Investments and I talking at 8 o'clock in the morning about what would potentially happen with the Mexico and Canada tariffs. And all I got to say is I got that one right. I actually remember saying in that video, all they have to do is declare troops on the border, and it's kind of like done. That's what the goal of those tariffs were. So again, I'll take that victory lap. It doesn't always happen. When I'm wrong, but certainly got that one correct. One thing that should not be ignored, there were 3 tariffs or 3 countries that were hit with tariffs: Canada, Mexico, and China. Now, obviously, as we've just said, Canada and Mexico have been at least delayed 30 days, but China went into effect. We are already seeing China respond. China is now putting a 15% tariff on coal and natural gas, 10% tariff on oil, farm equipment, certain cars and trucks. Now, it looks like this is the beginning of tit for tat. China sees a very high likelihood of further rounds of tariffs on both sides. One of the things that was interesting is China really needs domestic consumption. And if you don't remember, we've talked about China's domestic consumption for about 3 years now, and it is woeful. It is horrible. Why? Well, quite frankly, they broke the trust of their citizens. What do I mean by that? For the longest time, the average Chinese citizen's goal was to buy real estate. It was their retirement account. And of course, for years, if not decades, real estate only went up. Now, obviously, as we've seen with Evergrande and lots of other builders, it was all built on craziness. And now there's been a quick reversal in housing. It's still going on. It's still depressed. And frankly, consumers are not spending. They are saving. They are conserving. So what does all that mean? Well, in reality, it means that China's leadership will likely have to turn on the money printer. If China is really going to see a drop in shipments of goods because of tariffs, they have to make it up somewhere. And they are going to have to get their citizens spending and investing. So I would expect the Chinese government to pull out a stimulus bazooka. And we could look for that probably in the next 90 to 120 days. It is really their only option to kind of get through this period. We did get the first of 3 jobs numbers, right? We get ADP tomorrow and the big number on Friday, but JOLTS report. And unlike last month where I got it right, I got this one wrong. The JOLTS report was 8.1 million last month. It was expected to be 8 million this month. And I thought it would surprise to the upside. Boy, was I wrong. I was way wrong. The JOLTS report was very disappointing. It came in at 7.6 million. So that job openings trend that we saw reverse last month has quickly reversed. Now, is that because jobs were hired? Is that because job openings were canceled? I don't know. But I want to admit when I'm right. And of course, when I'm wrong in this one, wrong. Got this one wrong. Read an interesting article about millennials from a company, a Financial Engines report, talking about millennials and their retirement expectations. They are reimagining retirement. First and foremost, they're living lives for the moment and not planning the same way that Gen X did for retirement. 32% of millennials will never fully retire. They're planning to never fully retire. They will emphasize instead choosing work they want to do in their 60s, which is very interesting, right? Maybe you bust your butt in a career until you're 60, then you exit. You don't have the retirement savings that maybe you would have because you were living life for the moment. But you have a second career. You have maybe you're coaching kids or a teacher or something. I think it is interesting. The last thing I will say about millennials is they've had a good 5 years. In 2019, it is estimated that their net worth combined was $3.94 trillion. Today, it is 15.95. Let's round those numbers. It was $4 million in 2000, or $4 trillion in 2019. It is now 16 trillion. So they have seen a whopping 400% increase in net worth. Wow. Millennials, you did something right the last 4 or 5 years. Congratulations. Guys, I don't know if you saw this, but there was a big announcement by the press secretary at the White House saying that the new media will have a seat in the press briefing. They actually opened up a website where you content creators like myself could go and apply. Apparently, there were 8,000 plus applications in 24 hours. I'm just curious. What do you think about the new media getting a seat at these press briefings and be able to ask questions. I think it's a wonderful idea. And you know what? If my channel ever gets to 100,000 subs, I will throw my hat in the ring. So if you want to see me in Washington, D.C., hit that subscribe button and let's go to 100,000 and I will fill out the application. Let's talk about what we're hearing from the Fed. Remember, this week we have plenty of Fed speakers, more today. We've got, who do we got today? We got Fed President Bostic and Goolsbee. Let's talk about Bostic first, Fed President Bostic. I don't expect clarity on inflation by March. To cut again, I need to see housing inflation roll over. We will have to just watch on tariffs. So really what Bostic is telling you is no March rate cut. How about Goolsbee? Fed President Goolsbee. The Fed should proceed more cautiously in cutting interest rates. U.S. consumer remains strong. No sign of slowing. Fiscal decisions impacting price or employment require careful consideration. And finally, Fed President Goolsbee warns of possible inflation increase, the dreaded double spike. That is not good. I do want to shout out 4 people for joining school in the last 48 hours. I want to thank Christine, Michael, Sean, and Josh. All joined school in the last 48 hours. Make sure you introduce yourself, get yourself to level 2, level 3, unlock all of those free education bonuses. All you got to do is, put in a couple of comments, like some posts. You will very quickly rise from level 1 to 2 to 3. Very cool. We are getting news that the White House signed an executive order to establish a sovereign wealth fund. I think this is a very interesting idea. I heard the boys at the All In podcast talk about this a couple of weeks ago. Basically, where you and I, the U.S. taxpayers, will take ownership interest in perhaps things that we invest in. So this sovereign wealth fund is potentially being set up to be an owner or an investor in TikTok. But I ask you, the government has made investments in lots of technology and lots of companies over the years. For example, I believe they made an investment in Tesla very early on. Instead of simply getting paid back, wouldn't it be good for all of us if we had a lottery ticket and maybe we owned 5% or 10% of companies we invested in? Now, again, plenty of those will go to zero, but some of them will turn into the next Tesla. A sovereign wealth fund is a net positive, in my opinion. So again, it's a very interesting idea. And then lastly, good old Paul Tudor Jones put out a comment that I think you and I should talk about. Paul Tudor Jones says, markets are on shakier ground today than Trump's first term, leaving no room for error. I think this is an interesting concept. And I think really what Paul is pointing at is today the stock market is richly valued. Some might argue priced for perfection. So that any slip up, any this or that could cause a domino effect. This is certainly not the case of the stock market in 2016, but it is certainly the case today. So folks, that's what I've got for you for the daily financial news. Don't forget to go buy your virtual ticket for our Vegas event. $99 get you access Saturday and Sunday. Also, we'll get you the replay just in case you can't watch it, but it will be there for you. Folks, I hope you have an amazing day. Like, subscribe, comment. Help us get to 100,000 subs so I can submit the, I don't know what it's called, application to potentially get selected to go to Washington, D.C. for a day and ask some questions. I think that'd be a lot of fun. All right, folks, take care. Later.